Welcome back, everyone. I hope you are all fine and well, and happy new week. So in this video, we're going to discuss just briefly about the fundamentals, the drivers of the market for this week, and then we're going to take a look at the technicals, what we have going on DXY, and then we're going to talk about a few of the trades that I'm currently holding, and that will be that. So without further ado, guys, let's get straight into it. So first off, we're going to start with the fundamentals we have coming on Tuesday, because on Monday, the best we had on Monday was just the manufacturing PMI from China and the Swiss National Bank chairman 𝗨𝗨𝗱𝗁𝗨 speech. All right, but the Swiss National Bank conversation really did take a toll on the market, especially on the Swiss franc pair, which didn't really sit well with the trade I had going on. But we're going to discuss that later. And then on Tuesday, which is going to be probably today or whenever you're watching it, Tuesday will be the 28th of January 2024. And we have in the United States, we have the core durable goods, we have the durable goods, we have the CB consumer confidence, which is what we should actually pay closer attention to. But that is not the real highlight of this week. The highlight of this week is on Wednesday, when we'll be having Wednesday and Thursday, when we'll be having a full-blown refinancing rate in Canada. We're going to be having the Fed FOMC statement, the Fed fund rate in the United States, and the Fed are actually planning not to cut rates, despite the fact that on Thursday last week, United States President, which is President Donald J. Trump, said that he's going to call for an immediate, it's going to call the Fed to cut rates immediately, which the Fed were like, nah, we ain't going to do that, which is something we should probably talk about. But, you know, as I've explained in the last video, that the Fed is a private organization, like it's a segregated organization from the political party. So Trump really had very small effect on the Fed like that. It can't really tell them what they should do. But we're going to talk about that anyways. But actually, let's talk about that real quickly. So right now, the current interest rate in the United States is 4.5%, which is still sitting at a very high rate, okay, because it discourages consumers to borrow money. And even some small sizes or small scale businesses can't really withstand the 4.5% interest rate. But so far, so good. The United States have seen a significant decrease in the inflation rate, both on PPI and CPI, which we're going to discuss after this. All right. So I think sooner or later, we're going to get some rate cuts. It might not be the first FOMC, or let's just say the Fed funds meeting, the Fed meeting in the year 2025. Probably we're not going to get that. But later in the year, probably before the first half of this year, we're going to get some rate cuts from the Fed. But as the case may be, right now the market is forecasting that the Fed are not planning to cut any rate, which we're going to likely see how it goes tomorrow, which is going to be on Wednesday, 29th of January. And then on Thursday, we have the ECB coming really hot on their main refinancing rate. And mind you, they are planning to cut 25 basis points. All right. So ECB is putting their foot forward, their strong foot forward, by saying we're going to go at it and cut the rate front, which is quite good. And then on Thursday, in the United States, we have the jobless claim for the week coming also. And then on Friday, we have some core PCE, the CAD GDP coming. So on Wednesday, I'm going to do another video. On Thursday, I'm going to do another video to talk about all of this. Okay, I don't want to spend too much time on this, but these are things you need to pay close attention to, because one way or the other, they're going to play a very big impact. So before I jump straight into the other part of the technicals where I want to show you, I want to talk about the hedge funds. The hedge finders. So I'm looking at some very indicator right here. I'm seeing some very interesting data. Let's start from DXY anyway. So looking at DXY right now, you see that we still have DXY hovering above the zone of what? On 107. Okay, it's still finding it hard to break below 107, which is quite interesting. All right, the fact that DXY couldn't break below here signals that there's still high possibility of getting a rebound from this zone, from this region right here. And that is the major reason why I'm still holding on to a USD card buy trade I just took yesterday, and the USD CHF trade that I've been taking. This is the third time I'll be taking that trade, honestly, okay, on USD CHF. I'm going to show that to you in a jiffy, right? But at the end of the day, we're going to talk about that. But for me, before I can start looking forward to to consider a bearish tone on DXY or on the United States economy generally, before they can be speaking bearish language to me, I've got to see DXY break below 107 region, have a very nice and decent pullback, and then see it continue all the way to the downside. That will be the only reason why I'll be considering a bearish momentum on DXY. And I'm not saying that alone. You can see, if you take a look at the economic indicator of dollar right now, you will notice that we have some very, very, very interesting data. Okay, so last week, yeah, in this month so far, the GDP in the United States has grown by 0.3%. Okay, the GDP has grown by 0.3%. The manufacturing PMI has also gotten robust, even though it's still below 50, which is the benchmark for a strong manufacturing data, manufacturing PMI. But at least it moved, it grew from 48.2 all the way up to 49.3, which is very, very strong. The service PMI also has boosted, okay, from 53.5 to 54.1, which is very decent and very good. The retail sales was the only data I can categorically say that came shorter than expected this month so far. All right, and then we have the CPI, the CPI year on year, and the core CPI month on month. Both of them comes quite good. All right, we are currently seeing or witnessing the inflation in the United States dropping. Okay, we are seeing a cooling inflation. All right, so consumers are getting robusted, even though the interest rate is quite high, 4.5. All right, consumers probably are getting discouraged from borrowing money from bank. Businesses are probably getting a hard time paying off their loans because of the interest rate. But at the end of the day, inflation is coming down. Okay, also the PPI also came down by 0.2%, okay, which is very good. Okay, so we have core PCE also came down by 0.1%. So all the inflation are cooling down. We have the CPI year on year, the monthly CPI, we have the PPI year on year, then we have the core PCE also. They're all slowing down gradually. And then we now have NFP with 96K newly added job to the economy. That is very solid. The unemployment rate also dropped by 0.1%, which is very good. Although the weekly unemployment claim, initial jobless claim, came up by 2,000, which is mostly not that effective. But I think what is really affecting dollar right now is just the tariffs drama between Trump and the rest of the world. Trump is having tariff drama with Colombia. He just picked a fight with Colombia lately. He has been having a dramatic pull and push with Mexico, with Canada. But Trump is this is Trump market right now that we're trading. So Trump is really having some very impactful it's really having some impactful effect in the market right now, and we really have to be careful because you will see that the major pairs, the pound dollar, the euro dollar, the Kiwi dollar, they've all been acting quite weird and lazy lately. Okay, as you can see, we have the weak GDP growth in the United Kingdom, although the manufacturing PMIs and the service PMI came stronger, all right, for last month. However, the retail sales was bad, the PPI year on year was bad, the unemployment rate was bad, and the interest rate was terrible. As a matter of fact, they hiked interest rate by 25 basis points. Who does that? From 4.5%, which was quite crazy in the United States, that they're planning to cut rates. The United States had to pad up to their interest rate because they really needed the money in the economy. And the best way to get the money is from what? The consumers, the small businesses that have to believe on loan. Literally, that's what I mean. So in the United Kingdom right now, the economy is not very suitable. In the United States, it's quite suitable. And that is why I'm still leaning towards I'm still leaning bearishly on GU right now, even though it is quite crazy. But as you can see on the chart right now, I'm still leaning very, very bearish on GU. And additionally, I took a short position on GJ. All right, on GJ, I took a short position on GJ, which seems to be running quite well. It was actually it's two trades. Okay, I took one somewhere around there. I took one trade right here on Friday, and I mean on Thursday last week. All right, and then on Friday I took another one right here. So that makes it two solid trades, which I'll be sharing the result with you anyways. So those are the two trades I want. I'm looking forward to taking a short position on GU probably by London session on Tuesday. I will definitely look into that. And then on USD card, I also took a buy trade, despite the fact that the market is ranging right at the top here. I took a buy trade on UCAD, and I want to see how that goes. And you know, we already have, like I told you earlier, we already have a very strong dollar. So I figured this is about time to just go in and just go all out for dollar, all right? Because to me, it's still very much strong. But as the case may be, I'm risking quite little on all of this trade because they're heavily dependable on dollar's strengths and weaknesses. And right now, dollar hasn't really found its angle yet in the market, with Trump picking fights with all of this country and with all this data. I mean, January just landed with a lot of data, a lot of information that the market couldn't really comprehend it. So everyone is just trying to factor and find their footings in the market. So as a trader, or if you're a beginner, this might not be the best time for you to start trading. You might want to wait till probably middle of February before you actually kick off trading. While as a professional, this is the time to actually minimize your risk. Okay, just minimize your risk at the end of the day, and just try to make sure you stick to the gun, stick to your rules. There's gonna be some time you're gonna get caught off. I've been caught off like 2-3 times this month already, and it's been a roller coaster. But at the end of the day, I have to reduce my exposure by bring everything all the way down to 0.5% per trade. So just to make sure I stay afloat until the market is settled, then I can go all in with my 1%, 1.5%, and how things goes. So that's more like everything I have for you today. I'm also looking forward to take a buy trade on USDCHF, which definitely I'll be taking tomorrow once the London market fully open. But right now, this is where I am. I have a buy trade on USD CAD. I have a short position on GJ, and I have a buy trade on Bitcoin as well, which I'll be sharing that as well with you. But overall, we have a strong dollar, we have a weak CAD, we have a very, very weak GU, pound, and that's more like it. And you can see in the Edge Finder reading right here, we have a very strong reading for USD CAD, which is very bullish, 9%. I mean, the score is 9, very bullish for USD CAD. That's another reason why I took the CAD trade, all right? But this is the data, okay? This is the technicals, everything aligns. So when the fundamentals and the technical aligns, what do? I look for entries and I just pick my trade, and that is all. So I will see you in the next one. Have a good day. I'll catch you in the next one for sure. Have a good day. Bye for now.